Good morning, traders. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Well, welcome everybody to the Traders Lab. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. Grab a pen and paper. We'll be talking a little bit about today's environment and potential structured trades based on the Trader Lab process that you can develop, which is based on trade plans and statistical probabilities. And we'll be going over some of those trades, but maybe even more important is not the trades, but why. Because if we don't understand why, then what's the point? So let's take a look at that after we take care of business. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get to real time, we'll talk. Also, if you have questions, please post them in the YouTube chat or in the Bookmap Discord Trader Lab community. Even if you're visiting in YouTube and you'd like to visit the Trader Lab, there's no cost, but you do need to verify your email. Use the link in the bottom of YouTube if you'd like to visit the community. And there are 60 PDFs of structured trades that you can dig into and reverse engineer, plus a library of webinars, not to mention the Trader Lab community. And it doesn't matter how long you've been trading, whether you're newer to this or you've been doing it a long time, there's something for everybody in Trader Lab. And the Trader Lab's about the business of trading. So it's serious community. It's about business and understanding what this business is versus what we might imagine it to be. And if you're interested in the business of trading, then the invitation is open. Also, I did post a link in YouTube. And guys, if you haven't watched this, it's very important. What it is Friday's webinar. And basically it says, stop gambling, start winning. And many of us don't know whether we have an edge or whether we're just gambling. And I think that's Webby addresses that pretty well. So if you're having winning trades and not getting the outcome that you're seeking as far as actually profitability, other than random winners, you might want to dig into that a little bit. And that webinar, the link is posted at the top of YouTube, will save you a lot of time. And of course, you have to bet everything for yourself. This is the higher time frame. Now, this is important because this is Friday's behavior. And I want to point this out to you because what was very interesting, this is a consolidation, okay? And we call it a micro composite. All it is, in our daily time frame, the market rotates over itself, right? Well, in all time frames or fractals, the behavior is generic. So what the market tends to do, the market goes down to go up, the market goes up to go down, the market goes down to go up, and the market goes up to go down. That's one part. The other part is, this was the previous low, bottom of that red bar, or the outside edge of this consolidation. We had a down day here that cleaned out the sell stops at this outside edge. And we had a target here. We had two targets. This one's about 88, 89, and we got the 96. That's not a direct hit by any means, but in the auction, the idea is to try to figure out what's too low. And nobody knows what that is until hindsight. But what we do know is there are sell stops under these outside edges of a consolidation. If the market goes down there and there's all these sell stops get lit up and then we close back inside, that gives you a lot of information. It says maybe we found too low. And now the sellers here with their buy stops above these highs are now potentially on the chopping block. So what do we do this day? We go up and we take out the previous swing high, which was right there. And the retail price is up here for the day, the yellow line. So that leaves a couple of things, either continuation higher or rotation or fall out the bottom, right? Now, but here's what's important. On Thursday, and this builds on how today might set up. You're going to find this interesting. I certainly did. And I actually had a dream about this. And I guess I might say if you've been doing this almost 46 years, you start having dreams. Not sure what to make of that. But we closed down here. So look at this. Excess this way, excess that way, and we close in the middle. That's called balance. Balance means we find outside edges. Sellers are up here. Buyers are out here. This is the fair price. So it creates rotations. Also, these were two neutral days. That means this day and this day, both sides were active, which is an indication of something called balance or two-sided trade. It's like everybody's beating on each other from outside edges. And when you get two neutral days, that means first hour high and low taken out. There's a very low probability that we get another neutral day or three in a row. It's really low, and I can't remember what it is. It might be 3% or something. You can't quote me on that because I don't remember, but it's infinitesimal. So on this day, now let's look at this day, because this, and I hope I grabbed the right chart here for you. Yeah. Now this is Friday, but this builds everything. Now on Friday, if you guys remember, our first short was near the high of the day. Lucky for everybody, right? Luck. And the reason is, on Thursday, this was the retail price and an upward distribution, and this is where sellers are here, buyers are here, and then we fell out of it, and we left that behind, too high. Then we started a new auction here with Thursday's low there, and Wednesday's retail price there. And this is very important. Now, on this day, Friday, there is approximately an 82-ish% probability we take out either this day's high or low. So if you guys remember Friday, and I did post Friday's stream in YouTube, you guys, if you want to kind of see how the pieces fit. So this was a short, and the idea was, the participant said, I'm not paying that. And they left the store. This is shopping. And this now is a dividing line. So that set up shorts from here. And then for the whole day, it was outside or mean reversion trading. So shorts, only shorts for me. Not a recommendation. You could have been long. You could be, whatever your plan is that has an edge. So I narrated those on Friday. It was a terrific day. If someone had a plan and an edge and they can execute it, and then whatever happens, happens. But here's the canary in the coal mine. You know about canaries, right? Not good to be a bird if when they take you in the coal mine. On this day, this was the value area high. And if you remember this day, we opened here, we had shorts down here, longs, and we got this whole thing. Then we fell out. Okay, so it was longs, short, just whatever. And then this day. Now, here's what's important. Over an 80% probability to take out the previous day's high or low. I don't know about you, but not so much on the high, so maybe we get the low. Now, there's something, and I'm spending time here because this is kind of part of how to think in conditional. When I built trading systems, the logic in the coding was conditional. So if this, then that. Well, if not, then what? So if this is too high, then, and that's where the dividing line was. So if this is too high, then if I come up here, then sell it. If I blow through here, then what? Then you're off sides. So right here, short, short, short. If I have over an 80% probability to take this high or low out, and I am under here, then the probability is to take this out and come back here. Fair price from this day. If this, then that. If not, which is a not, then what? And that perplexed me because we didn't do something. Think about this. If the market has sell stops here and we don't get to it, doesn't that suggest something might be awry? Now let's look. I'm going to take it now back to the higher time frame. So now we have an inside day. Inside day, neutral day, consolidation. So what you have in the intermediate time frame is a consolidation. Chop, 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 chop. Energy on both sides. Buy stops here, sell stops here, and then what? Oh, good luck with that. If we gap, and this is more or less, I don't know where we opened, but because I did this early this morning, then we have 58.15 as an intermediate time frame. Retail price comes from here, and we have the ETH high, wherever that is, and possibly 5,900. None of these are recommendations. These are auction-based structures. Look at where we go. This is 15. I cut it off, unfortunately, but 58.15. So what do we anticipate? Now, this is all Trader Lab methodology. Now, Trader Lab, this is an advanced process, but anybody can learn it. You know, one of those things. So let's now get down into the developing daily time frame. Now, any questions before I motor forward? How we doing? Please give a like, and don't forget, use the link there. I posted a webinar up there for you guys, special for you guys in YouTube. Stop gambling, start winning. We are gamblers, and we don't know it. You're going to say, well, trading is gambling. Actually, it is gaming. And there's a difference between gaming and gambling. You know the difference. Well, most of us who come into trading, unfortunately, are gamblers, and we don't know it. So while we are taking risk, if we only get involved when we have an edge, then now we are gaming. And that it means we are assuming we actually have an edge and it's vetted and we can execute it. A number of elements that must come together. Then it's just sitting there and playing your game, if you will, or the way the casinos operate. They only play games that have an edge. They do pay to gamblers, but over time they extract dollars from the gamblers. That's called gaming, and they are very good at it. So what are we doing? Well, if we have winners, which we do, even if we don't have an edge, then we are gamblers. And gamblers, while they have winning hands, do not walk out of the casino over time with the dollars. The casino extracts the dollars from the gamblers. So you have to decide, are you trying to be a better gambler, or do you want to join the house side of the table? And of course, you have to bet everything for yourself. Now, this is the RTH open. This is the ETH volume point of control. This is the retail price from the ETH. In other words, the fair price, high volume. And you're going to find this unique or interesting. What was the higher time frame retail price? 15, right there. And just to come back to help you see the structure, the 15 is there. So if you get a 200-point gap or whatever it is, the possibility is if somebody is long, they are going to do something called responsive selling. Responsive selling means on a huge gap, if you're sitting long, what might you do? Might you sell, take a profit? Well, in the Trader Lab, now there's always possibilities. Market can open and not look back. It's gap and go, and it's the end of the planet, and we're all, left behind with the jaw on the floor. Or we understand, because we have a trade plan, possibilities. If this is the retail price in the ETH and we test it and it's too high, possibility is we're going to come down and test what's too low. This is called mean reversion. And this is more advanced because I'm putting multiple time frames together. And now I'm going to show you my trades. Now, structured trades, I should say, not my trades, some of them. And others I won't get into. But this is a broad stroke. The idea to Trader Lab is that you learn how the market works, not what it'll do, because nobody has a clue. So don't worry about that. You're not going to know what's going to happen, neither do I. But I do know what might happen. And if I know what might happen, then I can eliminate things that aren't in alignment with what might happen. Then I'm only going to take trades in alignment with what might happen that fits the current condition of the market. If this, then that. If not, then what? If I open in a huge gap, if this, then that. And I check a key level. And if it's too high, then what? Then south of the border. And then I don't know where. Believe me, my teeth chatter the same as yours. Why? Fear. But does fear control me? No. It's my primal wiring. So I recognize fear, but I've learned to detach myself from the random outcome. I'm always going to be fearful, and that's apprehension or anxious. You know, it's all the same. But I also know that I have no control over what the other participants do. All I can do is control myself, and then I don't know what's going to happen. I'm not in the business of prediction. If the casinos could predict, they'd probably skip the hands that don't work for them. So this is called a variable high volume node. I made these terms up when I started doing this. I've been doing this a long time. I started out with market profile in the mid 1980s, and I couldn't do anything with it early on because I was using indicators, and I thought it would be a great thing to put them together. Yep, not so much, but you'll learn. So, too high. Sellers are here. I come back and test. Now, this is a Trader Labs short. It's a structured trade, and it's very aggressive. Now, I'm mentioning it's a Trader Labs short. And I'm also going to tell you, for me today, I did not take it because I don't rush in when I'm opening out of range, out of value, and it's news-based, fundamental disruptor. So, but if you're just using the auction process, this is a short. But I think it has a lot more risk because there's really nothing sitting over here except this liquidity and outside edge. So, in a higher time frame. So I didn't take it, but I was reading it. So I said, okay, I see my responsive selling. Not unrealistic. So let's watch. Resting liquidity. So I'm looking at this and I'm going, let's, get some of this going. So I see my sellers are doing a heck of a job and I'm going, okay, I guess that would have been a good short. But I don't worry about that because I don't blindly trade. I go, well, I know I can get to 15. Now I'm going to explain a somewhat complex concept to you. And the only thing that makes it complex is thinking in multiple time frames as you guys think of time. And in the intermediate time frame, I'm actually trading something called mean reversion. And this will make you a little dizzy because I'm doing it inside of something called fractals. Now let's look at this. The last auction is the ETH. This is the retail price or high volume. In the next higher time frame, this is the retail price. So if this is too high, I can revert to this, the next higher time frame up. Both of them are doing the same behaviors in different time frames. Now, before I ask you the next question, which I'm going to, are you guys tracking? Is this logical for you? Somebody was just asking me, and I can't see who. Yeah, my higher time frame chart is RTH only. ETH is not part of higher time frame for me. ETH high and low is because of statistics. And we have a whole bunch of statistics available in TraderLab. It's over 90% probability we take out either ETH high or low, past performance not indicative of future results. Also over 90% probability we take out the first hour's high or low, and about an 80% probability-ish or something to get to that. If I get to that and I don't keep going to the ETH high, then where am I looking for? 15. So I was trading towards 15. Now does anybody have a question before I ask you guys the next question? And do you even imagine what I'm going to ask you? Probably not. Okay, for a lot. Yeah, you got it. You're welcome. How we doing, guys? Please give a like if you're in YouTube. I think you're going to like this. Now, let's look at an advanced concept. Fractals. Guys, what's a fractal? It's a Russian doll. You know Russian dolls, Matryoshka dolls, they're vertical. They're inside each other. And the way I think of this, and T46, who's in the TraderLab community, thanks for all the posting you do, he was talking about how he stripped everything out of his charts so he could see what's important. I'm the same. I'm what I call a minimalist, because if I have redundant inputs or a lot of noise, it creates conflict for me, and ambiguity, conflict, hesitancy, and thrashing. And years ago, I thought more created more certainty. Well, no, it's the opposite. More creates conflict and randomness. You can't create an edge in a random environment with random inputs. My primer webinar, it's got about 32 or 33,000 views. It's available in TraderLab. You should look at that. It's about an hour. It talks about anchored inputs versus random inputs. Because if you're using random inputs, you're just gambling. And that's why I posted the link to the webinar I did on Friday up in YouTube. You guys ought to hang out, sit down, and watch that thing, because it's going to give you, I think, the straight oil from the can. Now, here's what I was going to say to you. If the market is fractal, and in the last auction, the ETH is too high, which means I can reject it and try to find what's too low. That's 15. So that becomes my target. But what is the language of the market? There's no indicators here. In other words, in the traditional sense of an indicator. Now, I see there's icebergs. I don't consider that an indicator. All it's doing is giving me the data coming from CME. No different than Delta. It's not an indicator. What are we going to do with this? I don't know what to do with it. Doesn't mean get long. This is order flow. Now, let's go down in time frame as you think of it. Now, I don't use time in the developing RTH because time doesn't control this. Participant behavior controls it. And if we're thinking this is an auction, the auction, which is the what's too high, what's too low, what's fair, and the participants are going to move this market around trying to answer that question. And they do it in all time frames. If you, as you think the clock, I don't use the clock here, only RTH open and close. I use the participant behavior because I can open this up using a high tier order flow tool like Bookmap, and I can see inside. And I want to see inside while everybody else is waiting on the clock. I can activate. Now, here's the point I'm trying to make. If the last full auction, which is the ETH, is too high, and now I go down in another time frame or fractal to the developing time frame, this yellow line is the retail price or highest volume. It starts at 0 at RTH open, 8:30 Central Time, my time. There's more volume here than there is here. So I have buying, which is absorbed. Now, this is right at the open. Who knows? You know, it's like, what happened here? Sellers are under the buyers. My retail price is here. I now have more volume coming in here. And if this becomes too high, this is called microstructure, and I come back to it. And what happens up here? You're asking, where's my buyers? Too high? Price check in aisle 3. You ever go to supermarket and they do that? and I get my sellers below my buyers. Now, this is advanced methodology. You can learn this in Trader Lab. It's not necessarily where you start, but it's narration. No, if I don't have an indicator, I'm going, what happened here? Well, they were absorbed. Okay, there's my sellers. If I come back to where my sellers were previously, which is here, and I get my sellers again, this is a trigger. Now, again, watch. Too high. So what do I know? Too high, too high. What's this? Well, this might be too low, but we know that's too high. Now, this is fractal trading. It's very advanced. Watch. VPOC migration. What does it say? Language, guys. I'm not paying that. Get out of here. Are you crazy? Who wants to pay this for one of these things? What about here? Let's label that one. So what do I see going on here? It's called responsive selling. Now, and again, I'm reading the market. I did not take this trade. I would under different conditions, not here. I'm using it to measure what I think is going on. And now I think, and I'm guessing, don't forget, that I know what's going on. So if I know the market is, those who are long want to take a profit and they're selling pretty good, then my job is to look for a way in to join the shorts. Where might that be? Well, let's look. Where's my resting liquidity? Let's look now. I'm going to draw a couple of little things for you here. And this is order flow and a way to kind of think about market mechanics. Just a thought, not a recommendation. So what do I know here? I had buyers here. I know I got sellers, up above in the ETH. Too high, too high. Here is a level. I'm going to try to move this out. Well, I'm going to leave it there for now. Let me just try to get some. Now, when I'm doing this, I'm watching the order flow. I'm watching the resting liquidity. Right in here is important because I want to see if the sellers, who's doing what to whom here? The sellers, if these are buyers and there's icebergs going off, do the buyers consume the sellers? It's like Pac-Man. Or do the sellers take out the buyers? So let's see what happens here. Right here, I'm looking at this, and I'm going, isn't that interesting? Actually, I was looking at along here, just so you know, I was looking at it, but then the VPOC shifted down, not qualified. So I was thinking this, and I was looking at this, but I like more range. I'm going to just tell you, and I posted this in Trader Lab. Maybe here to here, but I said to myself, nah. So I waited. I'm trying to remember if I got this short or not. Let me look, 833. Because I took mostly, guys, I'm looking at my trades here. I got to find them because I forget what I do because I kind of live in the moment, 1 second, trying to get back here. Did I get a short there? I think I did. 8. No. Okay. I was looking at this. I didn't take anything. Range. So let's look a little further. VPOC migration. So what do we know? Too high? New retail price. So what's happening is, let's talk the language of the market. I don't use indicators. What I've figured out was if I can understand order flow and read the auction, I want to be here. I don't want to be, getting in over here if I'm going to take a short. I'm going to get in here or here. So this is not a short, but let's keep going. So now what's interesting here is when you see this behavior, there's absorption going on here. See the icebergs? See the icebergs? See the icebergs? So what happened when you see the delta and it's not going down, those are buyers, okay? And you see the icebergs. So I know that those guys are buying. But that's not a reason to get long. My resistance is there. Oh, I'm not paying that. And then I come down. I come back. This is my resistance. You got to be kidding. What's over here? Buyers. Trying to find my trades again. I'm losing it here. 8. Here. Now this one, you see, now what's the difference between this and this? Don't they look the same? Well, this is where my first short comes in. So now, remember, this is too high. Variable high volume node, VWAP, and this is my first short. Now, why would I take a short? Great question. Sometimes, I have the mid, I have a variable high volume node, and right now, what I have is a distribution down here. This is an auction. I found my buyers down here, and this is too high. Right there. Too high. Absorption, break high. Test, absorption. Come outside and squeeze. Now, because I kind of like, for me, I don't want to join the leg that's getting squeezed. I want to use the squeeze to get positioned for the return here. It's called mean reversion. So let's look. Liquidity is sitting up here, outside edge. This is my first short. And I got in, not that it mattered. Let's see if I got the right time. I don't know if you really need to know my entries. It might not be worth anything to you, but let me try to find it. Well, probably not worth our time, but 35. So I got in right here. Now here's what set this up. Well, first of all, the mid, which is not my thing, but when I see the mid, so we go through the VWAP. I've got liquidity right here. So I was looking here, nada. I have my variable high volume node here. Test, sweep, location, stops are out here, and then entry. So I got short here, and this is my scale. And then I'm going for this. Now what happened here? So I got here, managed the trade, got taken, and now I'm coming back up here. Let me get you my next trade, because I think I had 3 of them. Yeah, I got taken out of that one. My runner got taken out. And then I came up at 914-ish. Now, this, and I took another short up here. Not saying these trades are any good. I'm just saying that's what I'm doing. Because I'm trading to the mean in multiple time frames. Now, this one, let me find this one. I normally don't give you my fills, but what the heck? I just want you to see what you can do if you can read order flow. And that doesn't mean it's not magic, 39. My short here was at 39. And how did that happen? Good question. This liquidity comes in the book. I get my stops out at mid. I do not run in front of the mid unless, as Dirty Harry says, do you feel lucky? I come outside. I have my absorption. I have my icebergs. I have 120 stops coming out. Thanks for playing. This is when your broker sends you a coupon to the buffet. And see all this? So 39 stops right here. Very tight stop going here. Called mean reversion. I'm trading outside in. That's what I'm doing. And where am I trying to go? 15. Here. So there you go. And there was another one here someplace. Oh, there's a long also. I'm sorry. I knew I had another trade in here. Now, is everybody with me, by the way? Oh, here's what I want to do. I want to put this back over here for you. One of these days, Bookmap is going to adjust this so they'll just extend to the right. See how this set this up? So this is a viable short. We have a sweep. I didn't take that one. This one, and wherever it was, and I think this one, right? So this, and there was another one, I think, but there's a long here. So it's put your questions, and I'm going to come up and look, and I'm going to try to get to real time so we can talk about this more. So at 9:30, we have what's called the IB stat. And the IB stat, there's over 90% probability we'll take out either the first hour's high or low. Now, for me, if I'm under here at the moment, it's too high. And I anticipate, don't forget, we're in an uptrend. So for me, I'm still inclined to be thinking long, but sometimes I go to, why aren't you trading longs? Well, this is a long. But what's the condition of the market? Now it's short. As a day trader, the trend can be up if you think the higher time frame trend is up, and I think at the moment we might say it is. But I'm not trading the higher time frame. I'm trading inside it. So if I see I'm in rotations and now the market is short, and this is a structured trade, it's called the IBF. What else makes this trade interesting? 15. What is 15? It's a fractal and a higher time frame. This is your retail price, and there's no precision in this thing. This is horseshoes and hand grenades. If this becomes too low, and I have a structured trade, which is a mean reversion trade, if I take a long here because of that, I can then come back here. That's the mean. So the long, if it's in your plan, or you don't take the long, you just go, I'm going to get myself a cup of coffee and get in the Barca lounger, then you have nothing to do. Sell, sweep. Now this is where the IBF happens. The IBF is an outside in there. Mean reversion. Now the shorts I was taking was mean reversion. That's the mean. If I take a long, and I'm leaning against this, don't forget, it's mean reversion to mean Matryoshka doll. They're inside each other. Is that making you guys crazy, or are you with me? How we doing in YouTube? Their versatility. What is that? Versatility? I don't understand. Yeah, Alan. Yeah, the thing is, thinking in multiple time frames as we think, is hard because it's very. That's what a trade plan is for, because this has to be all laid out so you recognize conditions and then you can respond on a timely basis. You really have to come into every day with an open mind, because what our job is to get in alignment, not to predict what will happen, because that doesn't work so well. So sell sweep here, which can be exhaustive. You've got it here. Resistance is out here. Sellers absorbed. So sellers are under here. Absorption. Sellers are absorbing, I should say. And now here we have a sweep. And we're under here. So if I don't get over this, I can keep going down. But my inclination, and here's part of this, the VWAP, the mid, and the VPOC, which is the highest volume at the moment in this day, is right here. That is called balance. I'm not trending. I'm rotating. As long as I'm rotating, my plan is mean reversion. Reversion trading is a separate trade plan. So as a day trader, the trend can be up, the trend can be down. I prefer aligning with the side that I think is in control. And that could be conflicting because maybe we'll say the higher time frame's in control here, but in the developing time frame, both sides are active. So I can pick a side. Now, my inclination, it's not a recommendation, is I can trade either side here. It doesn't matter. But it's only been short so far because I know the market is long, and I know that if I get buying, there's sell stops under the market. The next thing I know is if I get a lot of shorts in these legs, that they can get squeezed out. So if I get a structured trade, which is a mean reversion trade. Now, I'm trading mean reversion outside in to there. But the opposite of that is outside back here and then the squeeze somewhere. So anyway, this is a long. Primary target is here. I'm going to show it to you. I'll give you a little more detail on it. Now, let me say something too. Trading is not mechanical. And many of us start in the business thinking that it's a plug and play, give me a setup, and every time it shows up, you push the button. Unfortunately, that is not how this works. And I say unfortunately because how many years have you spent trying to do that? I'm going to tell you, for me, too many. Sweep, trigger, support is there, and support is here. So I got support, support. So, and now I have to get through this. So when this happens, there's two ways you could work this. You could do a short from here, and you have to be looking at where the buyers took control because the sellers were here. That's what creates this. The buyers are here and there. Two locations. I'm going to draw a little box around this for you. Try to help you see it. And this is auction-based processing. So what it says is, it's language. So sellers were here. There you go. These guys were absorbed. There you go. Sellers, buyers. Buyers take control. They're over the sellers here. Buyer, buyer. There's the delta. You'll notice we had big selling delta, but these buyers are above these guys. They were absorbed. I break high, and now I come back here. What do I know about this? Key location, 15 and IB. There's two trades here. The IB continuation trade, which is a short, and you have to scale here. So doesn't qualify for me. And here, you're really reaching, because remember why? The sellers were here. They got taken out. So if the sellers were here and the buyers are above the sellers, and I don't see, look at who's in control. The buyers, sellers take a shot here. The buyers are in control. Now my sellers come back in here. Where's my buyers? Where's my sellers are here. My buyers are trying here, and my sellers take control back. This was a problem for me. And when I look at these trades, I'm just telling you me, and I'm very patient. I'm no longer like, I got to take this trade. I got to do that. It just doesn't matter to me. I mean, there's always another trade, right? So, because I'm thinking the trend is up, and this is my target, you see? So I'm kind of I'm in conflict. If I'm in conflict, I don't put a trade on. I just go, that's what I do. I go, because now my brain starts flipping. It's like long, short, short here, long there, So then I just go, wait. What happens here? Support. No clue. See? So I draw these out. And I also know if I look over here, let's go look over here. Sellers were here. So that's my resistance. This is my support. Resistance, support. I mean, if I want to sell this, I can, but I got to do something with this before I come out to where the buyers took control. Can you guys see how you might look at this? And the thing about it is, why does the market come down here? Because there's sellers there. There's the icebergs. They're the limit orders. They're passive. They're hanging out here. Give me some S&Bs. Have some more. What happened over here? The buyers were here. So I get the sellers here. We come down. The buyers that were here, they go, oh, some more? So, all right, you want to, here, have some. Oh, I want some. Chop, chop. Break high. Buyers in control. See? So anyway, just a way to think about it. So now, and if I can get over this, then I come all the way back across and start squeezing these guys out. Support. Where do we come? Support. You see? So, up to you. And this trade, the goal is to come here for the scale, and then it's short again. I think I have one more trade I got to take here before I had to stop. Let me just see if I can find it, guys. Yeah. So where are we here? Watch. This is still mean reversion. This is your resistance out here. Let's try to look at this. Resistance is here, right? Let's look at structure. In this little fractal right there, and I'm going down in time frame as you think of it, that little node is called the high volume node. It's the volume in there. Now, if I'm trading volume to volume, basically, I'm trading, and when I come up here and it's too high, the shoppers here, too high, too low, too high, too low, retail. I'm not paying that. They leave the store. Let's get in the car. Let's go someplace else. So, now I didn't get to take this one. There's my liquidity. There's my buyers. Buy stops coming out. And what am I trying to trade? Outside in, which is reversion trading. So my volume is here. My sellers take control here. Now remember, let's look at the pieces. Let's try to put this together. It's here. So where this was coming from over to the left, now we're back in the area where the sellers were. The sellers, this is a trigger. Now, out here is a low volume node. I'm just going to draw. Now, what I'm showing you is a combination of order flow and the output of order flow. The output of order flow is price action. So if I am not yet up to speed on order flow, and it's a specialty like any other tool, it takes skill. Right here is where my short would be. But without an understanding of what's going on here with these components, this is my trigger. Now my test is going to be where the sellers took over, which is here and here, under here. The buyers are here, the buyers are there because we're lifting, and then the sellers are below the buyers, and the sellers are below the buyers. So the buyers were there, the buyers were there. Now I got a trigger. I test, and this is a short, this is a short. Your stop is up here, and where are you going? Mean reversion. Where's the mean? The mean is here. So you could be scaling at VWAP or coming just back here. It's up to you. Here, that's one I should have jumped on, but I was posting in TradeLab. I don't multitask well. And back here. So the idea of this trade is to go from here to there, back to 15, back to the IB, because there's going to be stops. Are we in real time now? Where are we? I don't even know. Are there any more trades here? rotational trading. I think we're up to date. You guys have questions? I'll come up and look, and then we'll try some real-time narration. And they're not trade recommendations. How you guys doing? Down 46. How we doing here? Yeah, T. That's very interesting about using AI. I'll have to look into that. Yeah, Rambo, mean reverting in multiple time frames. Russian dolls. By the way, please give a like if you're visiting in YouTube. And guys, if you're visiting in YouTube, there's a link at the top of the chat that I posted about Friday's webinar. It is one of the more important ones that you should spend some time with. It talks about the business and the difference between gambling and actually potentially creating a sustainable business. And the Trader Lab is all about the business of trading. And most of us don't understand what we're trying to do here and the environment we're in. And it goes into all the reasons. I won't take your time with it here. You follow this stream, you already know, but it's kind of put together in an interesting way. And what the typical problems are for retail traders and why many of them don't succeed when they probably could. Over the years, I've seen many traders who I thought had the potential and they don't succeed. And they also have other elements in common for why they don't succeed. And they don't understand themselves. And don't forget, the trend is up. So I got to turn a few levels on here from Investor RT, which exports my levels. Bookmap, it'll give us high volume. It gives us everything, actually, that I need. And it's nice not to have to do it manually. So if you have questions, post them. And I will try to get back to real time here if I can just get everything back in order over here. Okay. Oh, NQ? Yeah, well, I don't go over NQ anymore. I was an NQ trader. I traded exclusively, and I was a high volume NQ trader, but back in the dot-com bust. That's how long ago. 100 trades a day, that kind of thing. And I've kind of, I'm a little bit more in the Barca lounger. ES is perfect, in my opinion, as long as you got range and volatility. When I was trading NQ, we had a lot tighter ranges. We didn't have the range that we have every day today now. So depth of market is very important for me, not getting skidded on stops and stuff like that. And for developing traders, ES, with the micros and all that, and there's good depth in the micros and the ES. I think it's a good environment for developing traders. I mean, the idea, guys, is to survive a learning curve, and it's not a 6-month plug-and-play event, unfortunately. This is going to take you years to master, but you got to really lay out and understand the business you're in, and then gradually build it out and deal with the impediments to success, because you're all going to experience them. And it's kind of approaching it in a way that anticipate problems, because you're pushing against primal wiring. And all of that's in all my webinars. I talk about the problems of becoming a consistent, profitable trader. It's much more complex than you imagine it to be, because if you haven't done this before, you have nothing to compare it to, really. Because this is a unique environment. So, we're trying to take what we know from our experience in the outside world and bring it here and apply it. It's very logical, but we're kind of on Mars, and we've landed in a place that has different rules, and it's a different environment. So we can't apply what works for us outside in this environment. Let's try to look a little further here now. Here you can see the buyers. This is an important location. We have liquidity here. I don't have anything to do here except this is a location, variable high volume node. Liquidity comes in the book here. Now, the thing to see about this is the hard thing with mean reversion, so you know, is where's the outside edge? And the joke in Trader Lab is, yeah, it's mean. Where is it out here, which is a low volume node, or can we get reversion from here? Now, is this real or is it just algorithmic? So we see the bracket here, and this is not anything other than a curiosity. So right here, we're just looking at, these are not trade recommendations. I'm not saying I'd do anything here. I'm just saying, let's read it together. So if I know there's sellers here because they're being absorbed, then what might happen right here? It's a question. Does that make sense? Do you guys see now let me show you the trigger. Now these are not trade recommendations. You and I are just having a pina colada together and we're sitting here watching the market, just thinking about, what does this mean? What does it mean? If you understand language, and the idea of this is to try to become a good translator of market mechanics and behavior, it doesn't mean this trade won't take a stop like every other trade. What this means is if I understand order flow, then right here, and let's just give it some concept. Sellers were here, sellers are here, sellers are below the buyers that are here. I come back and test, these sellers are still here and my sellers are still here. And if I can't get back above this, then down to here. What do you think? Maybe? It's not a trade. It's some narration of market mechanics. Because how do you trade this? Is the trend up? Should you only be taking longs? Or should you take shorts? Or should you just be in park and just sit here and work on your crochet? The answer lies in your trade plan. When you have to say to yourself, what should I do? The answer is nothing, because you don't have a plan. If you understand your plan and where it aligns with the condition of the market, maybe you take this short. And you would scale and have to scale in front of the mid or the VWAP. And I think this is here, mean reversion. I'm sorry, that's the VPOC. I didn't see it. So you're trying to come here. But you have to be careful because mechanical retail buyers buy the mid. Oh, it's going up, Lewis. And they might be right. The gamblers get paid. So if you take a short, you got to scale in front of the mid, and then you're looking for this. And if you don't scale the mid, then you might get stuffed. And are you okay with that? For me, risk management, job number one. I don't worry about the rest. Because if I can get risk neutral, I bought a ticket to ride. And this is part of having a trade plan. If we anticipate retail traders are going to buy the mid, which is this, wouldn't I scale here? Because I'm anticipating a counter rotation and they get paid. The gamblers get paid. I'm, in my viewpoint, in the way I define the condition of the market, we are rotational, which is mean reversion. We are not at the moment directional. Now that can change at any time, right? I am seeing buying here. So I need to get below these guys. We'll see what it does because there's going to be stops under here. So the trade is short to there, or if you feel lucky, and Dirty Harry is there saying, well, do you feel lucky? Then you're going for this. because you think we're in mean reversion, and it never has to get here. And then out the bottom again to wherever, and then it's trade management. Are you guys tracking? Is this making some sense? This is mean reversion, subject to the time frame you operate in. Some traders are going to be long. Other traders are going to be trading the rotations. Other traders are going to be going, what's going on? And they don't have a trade. Other traders are going to be impulsing in with FOMO and just playing a video game. And unfortunately, if you watch my webinar from Friday, that's posted at the top of YouTube, you'll understand why that is not sustainable. So the Trader Lab is about helping traders understand the business they're trying to be in and then what to do about it. And then it's up to each individual trader to put the time in. And it's not going to be plug and play. I can assure you, if plug and play worked, all those webinars or videos or chats or gurus that you've checked out that said the only thing you need, one trade, 5 minutes, I make $20,000. You hear all that nonsense. If you're even responding to that, you should slap yourself with a cold flounder. That's all I can tell you. It's not the real world. It's nonsense. That kind of stuff's been going on since advertising and marketing started. And it's nonsense. This business requires 150%, and it will test you beyond anything you can imagine. And it's really counterintuitive because your intuition is seeking certainty and confirmation. In our business, it doesn't exist. So, we're trying to solve for that, but it doesn't exist. So, and I don't want to spend time on this because I really want to spend time elsewhere, but that's the problem. I call it Trader Groundhog Day because when you have winning trades, remember, gamblers have winning hands. You just want to win more. Okay. But you use the process that gets you the winnings and you think more winnings. I mean, all of that sounds so good, but here's the problem. Everybody has winning trades. But if you don't have a statistical edge, you're still going to lose. And you know that, except you think it's more winning trades. It's not more winning trades. It's actually only trades with an edge. And most retail traders never can tell me if I say, what's your edge on this trade? And there's like crickets because they're just playing a video game. And then they're on their way out of the business. Just as they say, the door hasn't hit you in the butt yet. I find it frustrating for me as an educator to see really good people who really want this, but they can't control themselves and do the work. They're just in such a hurry to click the button and play the game that they forget that that's not what keeps you in the business. It's what takes you out of the business. So this is our resistance still. Now the trade is here. If we come back here, we know there's stops up here. Then if we approach this, we need to watch where the sellers were in control, okay? And we need to watch the order flow up here, the liquidity. What are they doing? Does this start pulling up here? Then there could be trouble in River City. What happens here? So this is, these are algos here. So you could see this here, watch the change. If we uptick and you see the behavior, now that's not a reason to do anything. It's a reason for you to research what you will do with that. Another piece of the puzzle, isn't it? Speaking of the puzzle, and trading is a puzzle. Watch the liquidity. You see how it's behaving? That's algo. We're coming up now in here. This trade has trouble in River City. See what's going on right there? This is where the sellers were. I see the liquidity pulling. Does that create a problem for me? Maybe. Let's look. So I have nothing to do here. There's my sellers again. They're the guys that were up here. So the way I look at this, if I took a short, I have to be risk neutral. And then if it comes across here, at the worst, I'd scratch the trade. Or once I'm coming back here, because now the mid buyers, they're the guys who have control. So this is where my sellers were. This is flashing. So and look at my icebergs. I'm at a very key location of potential behavior here. What else do I know? I got stops above this swing, and now I have this. And this is pulling, so I anticipate it's going to go higher. Now, if I took this trade, I'd be out of it. There's nothing more to think about. And then I have to say to myself, did I follow my plan? Yeah. Okay. Did the trade do its job? Yeah, it did. Would I have liked it to go further? Of course. Do I control that? Nope. What do I control? What I do. And how do I measure myself? Is it the winning trades? No. It's following my plan. If I follow my plan, I'm going to take losses just like you do. But if I follow my plan, same as the casinos, I'm going to extract dollars from the other side. Not necessarily on this trade or any trade, but over a large sample size, the dollars flow to the house. And we do pay to gamblers, overhead and cost of production. And if you're just visiting in YouTube, there's a link there at the top of the chat. If you haven't had a chance to watch it, it's really about gambling versus winning. And it's really key. Yeah, I think it's the cornerstone of understanding the business you want to be in. Plus, there's a whole library of webinars in the Trader Lab. It's a community of like-minded traders who have come together to leverage their collective experience. And there's a lot of documentation and support. And it's never a recommendation you do anything. The Trader Lab's a community, and then it's for serious traders who are interested in the business. It's not romper room, and no, there's no plug and play. If you're looking for plug and play, you're not going to find it, at least not in the Trader Lab, because at least for me, and I'm going on 46 years of doing this, didn't work, and I've done everything you've done. I just did it a lot longer because I had no information when I started in 1980. So liquidity comes back in here. This is a buy sweep. This suggests counter rotation. Now, it's not necessarily a short because we're not really outside. We're just rotational. So I have nothing to do. This would be the last rotation, and this could still come down here and get these guys. But you have to have a plan for this. So for me, I just sit back. I go, I kind of look at it, and this is something you guys have to kind of figure out. I'm not one who likes to be overly active. I like to trade range because I take stops, surprise, and you do, I do. It's overhead and cost of production. So if I'm going to put risk on, and my risk is 3 points, it could be a little more, depends on the volatility, I've got to get paid. I'm not putting 3 points on to get a 3-point scale. I'm sorry, to get a 3-point target. If I put a risk on out here, 34 to 27, I could take that trade. I could take this trade because this fits. Because I know if I come under here, I can come down below. I can take these trades, but I have to have range. I'm not interested in putting, because my risk is constant. So I find for me, I need to put trades on that give me range so I can pay for my stops, which we all take, right? So in between, I just hang out. I do not scalp, but every trade see how look at the order flow here. There's nothing really going on. This is pulling. So this suggests higher. Not a recommendation. It doesn't mean get long. It just says, this was the last short, if you took one. This, not so much. Can you see why? Why wouldn't we do that? Let's come back. Look left. Where's the stops? Over here and over here. If the market has all these sellers, what's the possibility? Squeeze the area. So this is the last shot on goal to come here, and not so much. So now we're sitting here and we're working on our crochet together. You guys have questions, post them. I'll come up and take a look. Yeah, L1F, yeah, the NQ, I call it the snake. Oh, thanks, JJ. Yeah, 46. Yeah, the NQ, I find, I mean, for me, I want depth. I don't want to get skidded. When I used to trade NQ, of course, we used to have, it was, executed on the floor. Actually, no, in 2000, it was electronic. I forget. Earlier on, when I was trading S&Ps, the big ones, it was pick up the phone, call your guy on the desk. So, and when I was managing money just years ago, when I say years ago, many years ago, I was a position trader, and for the S&P, short term was 2 to 3 day swings. So that's what I did. But back then, also in the mid 80s, a 30-point move in the Dows, you'd call somebody up to say there was a big day. So the fact that liquidity comes in the book, that is not the primary input. The primary input for me is something called context. And this is what set up the shorts. Too high, and then where do we go in the next fractal? Too low. And these are broad strokes. When you go up in higher time frame, there's more slop, right? When you get down into microstructure, you can get, there's more, I don't like to use the word precision, but you can really see the same thing, except it's in micro. So as an example, this is an auction. Chop, 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 chop. Micro high volume. Sellers take control. Come back and check the micro high volume. When I come back in a higher time frame, as you think of it, this is the high volume. It's the same behavior. Coming here is the same as leaving there. Coming up here on the open, if it's too high, is the same as leaving there to come back there. It's all the same. Now, is this very confusing? And it's okay if it is, by the way, but does this make sense? If you're visiting in YouTube, yes, the IBF did qualify. Introductions. I don't know where you came up with that one. I like that one. Please give a like if you're visiting in YouTube. And by the way, guys, subscribe to the channel so you get notifications of interesting stuff. There is a link in the bottom of YouTube if you want to visit the Trader Lab. There's no cost. There's a library of webinars. There's 60 PDFs of these structured trades. Now, there's nothing mechanical. If you think it's plug and play, I'm going to say skip the journey. Don't bother. Not the way this works. If it did, I would have spent 10 years less trying to figure this out. Because I kept thinking, I see, we're very good at seeing repetitive patterns, but that doesn't mean a pattern has an edge. Notice here, VHVN to here. These are derivatives of advanced processes. I'm not a vendor. There's no cost for this. And a lot of this, traders were asking me, what are you doing? And so I said, here, I'll throw some stuff together. Also, a bunch of this is research oriented. It's from 2020, 2021. I was working with Bookmap developers on some ideas, and some have been incorporated into current add-ons, and others got thrown out the window, which is what you do with research. I'm still doing research. These are actual trades, and some of these are other things, Anyway, you can have these, no cost. Order flow phenomena. This is a trade I was short. This is a bracketing algo. They pulled and pushed. I was short. I hit the plunger. That was my exit. And then the market exploded to the upside. That's back, and this is also probably from around 2020. It's just stuff, In fact, as long as we're looking at this, since I don't have anything going on here, other than working on my crochet, I want to show you what the Trader Lab chat looks like. And this is a serious community. And if you're looking for a serious community, this might be a place for you to visit. There's a lot going on. Mutual support, charts, graphs, call contracts sold in the SPY. Yeah, that's good, Lou. You know, ODTE options are a big deal, and that's a very big part of our market. Now, I don't use them personally, but there's a lot of things you can do. I am a minimalist. That doesn't make it right. I found that for me, anytime I have conflict, it creates thrashing. So I don't use anything in the sense of I'm a minimalist. So I always say I'm a minimalist because I need clarity in my decision or my inputs. But it doesn't hurt to use whatever you need. I found, because early on when I was learning trading at the CME back in 1980, I learned classical bar charting. Indicators and technical analysis, as we knew it, was really more trend lines, pennants, head and shoulders, that kind of stuff. Oscillators and all that was new. Wells Wilder, all that kind of stuff. I shared an office with George Lane. He created stochastics, which of course you guys are familiar with. So I thought that was the holy grail. So I went on this, what do you call it? A pilgrimage of indicators, mixing indicators timeframes, and thinking that you just have to find that balance. So of course I had winning trades. And then I tried to optimize it to make it better, more winning trades. Well, unfortunately, that was the problem. Didn't know it. Just thought I had to work harder. Trader Groundhog Day. Thanks, Rod. So, and this is our context grid sheet I made up years ago. I mean, it was like buried on my desk somewhere. It gives you what is the condition of the market and what qualifies and what doesn't. If you're using kind of one size fits all, I think you're going to be challenged because the market changes its condition. If the trend is up and I'm trading rotational mean reversion trades, I'm trading a condition inside an up condition. When it changes, then everything may point north. Then I'm no longer going to be fading. I'm going to be going from the other direction, or I'm done for the day. It really doesn't matter. Think about that. And let's see what else I got. Oh, yeah, the library of webinars. And I always have to thank Ned for this. And everybody ought to be thanking Ned. He keeps this thing organized for us. This is the primer. You should watch that. This is an advanced trader methodology. Doesn't mean you have to be advanced. It means that this process is going to challenge you. Not that it's complicated. I think the problem for traders is this is actually simple. And we believe it's complex to become a trader. It's really not complex, trading part of it. What's complex is dealing with randomness. That's our problem. We're in an environment that's completely random. It can change on a dime, a random tweet or some fundamental input like we had over the weekend with the China deal. That input changes the potential valuation of the product. And it's no different in the old days when I was trading grains, crop report. Remember trading places with beaks and the orange juice report? Remember? Well, fundamental inputs changes everything. Anyway, meet the Trader Lab. This is the process. And then a day, the plan, the trades, and then, go from there. Are you a trader or gambler? Why traders using indicators fail, and then, of course, trapped in Trader Groundhog Day. That was me for maybe 10 years. Could be longer, but it's one of those painful things I don't want to think about because I spent so many years coming back in the same place, curve fitting, making it better, getting excited. I got you now. No. Couldn't figure it out. So I built systems to optimize. So with more, I thought I could do it better. I guess I'm not doing this well enough. Let's build systems. And there goes another 5 or so years. And then that ends up getting tossed. So I've gotten to do pretty much everything you've done. Maybe not everything, but there's been a lot of new labels put on old ideas so they can be marketed to the public. There's really nothing new in trading. The market changes all the time, but the nature, what the actual business is the same. And the business is rotations, randomness, alignment, risk management, processes to manage your trade, and self-control or discipline in dealing with the emotional obstacles. That's our business. It's always been that way. So that's not going to change. You know, marketers will wrap it in new wrappers for you, but it has not changed. And the tools are pretty much generic. I don't use any indicators, so I guess that might mean I don't need those tools. But how does a developing trader sort through all this? Well, I would suggest you don't keep doing what you're doing if it's not working, and you call a timeout. Big sweep. And what's our retail price from the ETH? And where's our stops? They're over the IB. Now, this is not a trade. Now, that's a location. I can say if I was long, which no longs for me at the moment, this would be my next target. Liquidity, location, location. And then you're looking for this, and we have over 90% probability taking out the ETH higher low. You remember that, right? Next target. Now, and I wouldn't, I'd just be sitting here, doesn't matter. Please give a like if you're in YouTube. Hope you're getting something out of this, guys. Do you have any questions? Yeah, Ben, it was responsive selling. Yeah, so responsive selling was the first. Yeah, it was shorts, but now it's not because now there's a thing to understand is responders are not the strong side. Responders are the weak side. The other part of it is when we were rotating down and we got buyers, which you might expect in a quote uptrend, we were still rotational, so they were getting thrown under the bus. When you rotate up, the shorts are under the bus. And this is where time frame and fractal comes in. What does the market do? The market goes up to go down. The market goes down to go up. The market goes up to go down, right? The market goes down to go up. The market goes up. And here it was in the middle, inside, to go down. The market goes down to go up. The market goes up to go down to go 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 up to go down. So if you think about that in all time frames and fractals, it's doing the same thing, and it rotates on itself. That's why you can pick a time frame or a fractal, and I don't remember, there's no time for me, so I use the term fractal in here to go. The market goes up, which is doing now, but let's get back to this. The market goes down to go up, market goes up to go down, market goes down to go up, market goes up to go down, market goes down to go up, market goes up to go down. Market goes down to go up. The market goes up to go down. The market goes down to go up. So now it's, if you want to be long, then you're out here. Actually, let's look at this one. Wasn't paying attention to it. So what do we know? What do we know? Great question. I ask myself, what do I know all the time? And I go, I don't know. I know I don't know. If this is the IBF, which is a long, and this, which is mean reversion, which is there, and I come out here, this is mean reversion. You see? So this is this to this, this is the same trade from both sides. What do I remember? What I know? That is 15, the big kahuna, high volume. If that's too high, this is the mean. Now, what's too low? And what's my next potential trade? You're asking. I'm going to ask the same question. Let's come back here. One of these, again, I'd really love these to be. So it would already be sitting here and I wouldn't forget this thing is here. That's why. And where else? Sellers were there, right? I'm going to draw another one of these little things just so we can know where these locations are. Sellers are here. Buyers are here. Buyers are here. See the red bubbles? Absorption. Buyers. Where are the sellers? Here. Where did the buyers take over? There. Now, where's my location? There, there. What's this? Resistance. Let's look. See what it does. I don't know. Don't know. Don't know. Always clueless. Not ignorant, just clueless because it's random. Now, if it doesn't get to, it doesn't have to get anywhere. You know, it depends what you're using. Now, for me, this would be a long out here. And because now we're inside, and if I come outside, I can come back and do mean reversion from the long side. Liquidity, location, location. Let's see what it looks like here. See? Structured trade. It's right there. So how do we do this? I have the same question myself. Remember where your sellers were here, buyers were absorbed, buyers are here, location, location, location. Cross. And so you would take, if you took the IBF, which is a structured trade, you got to scale here because you're coming back. And if we come through, all the shorts in here go under the bus. Hope you got something out of this today, guys. Please leave a like, subscribe to the channel. Be sure to grab the link at the top of the chat in YouTube. Be sure to watch that. It's about gambling versus winning as a trader. You might want to watch that one. Please give a like. Come to the Trader Lab. There's no cost. There's a link in the bottom of YouTube. Click on that thing. All you got to do is confirm your email so we know you're not a spam or a fisher. And you're welcome to the Trader Lab community. Thanks again, guys. Look forward to seeing you tomorrow. Trade safe, be patient, and have a plan that gives you a statistical edge. In my opinion, that's the only way to create a sustainable business. And of course, past performance is never indicative of future results. Thanks again, everybody. Hit the like on the way out and subscribe. Thanks. And have a great day.